Microsoft earnings, I just mentioned, they're out. Steve Kovach has the numbers.
Hey, Morgan, I was reading your mind here. It is a beat on the top and bottom lines here. Let me go over what we got. EPS coming in at $2.95. Street was looking for $2.93. Revenue, just a slight beat here, $64.7 billion. Street was looking for $64.39 billion. And then Azure cloud growth, as you know, super important. That did miss expectations here. Street was looking for 30.2%, but they printed here 29% Azure revenue growth. I'm going to keep digging through these numbers and come back with some more commentary for you guys. Especially important how much of that Azure cloud growth was related to artificial intelligence. I'll be right back with you guys on that. Back to you.
Okay, and we will come back to you as soon as you have more to bring us. So, Kevin, yes. I mean, right there, you've got shares of Microsoft now down more than 7%, largely on this Azure cloud miss. I mean, 29% represents a deceleration in the growth that was starting to perk up in recent quarters.
It's a slight miss on their Azure revenue growth, but what I will point out is investors need to remember that the AI CapEx spending game is a long game, and it may be years before we start to realize the benefits of all those investments. Microsoft was very early to the game. They continue to spend in the areas of AI. I think there's work to be done on the Copilot side. They have to address security concerns. They have to address a higher price point, but Cloud Azure is going to be their revenue for growth potential for years to come.
Okay, Paul, this is traditionally a difficult quarter for Microsoft. If you're just looking at the quarter itself, also the end of the fiscal year, and we're going to get more sense of the guidance on the call. So, I mean, how much does this Azure, you can call it a miss, because certainly the whispers and the hopes were higher. Can AI assuage any of that, or is it perhaps proof that AI can't do everything?
Yeah, I mean, I think, John, what you said is the key point is this quarter is usually a weak quarter for Microsoft in terms of its earnings and its stock price reaction. It's historically weak in reaction to this July report. Last quarter, Azure was the, stronger than expected. Stock rallied. So this quarter, we're seeing the opposite and the stock's falling. What I think is really interesting that you mentioned AI is ever since the launch of, from 2001 up until ChatGPT was launched, Microsoft, when it reported earnings, had an average move of about 1 to 2% up plus or minus in reaction to its report. Since ChatGPT, the last 6 quarters, I believe it is, its average move is plus or minus 10% or 12%. So it's become very volatile in reaction to earnings during these periods. But the overall trend for the stock has been up. It's just the short term, the market gets ultra focused on the smallest beat or gain because there's just so much focus on the cloud and AI here.
Could see some reaction there. Amazon taking it on the chin, another hyperscaler down more than 3%. NASDAQ 100 not faring well as all in reaction to Microsoft being down a little more than 7, Morgan.
Yeah. It goes back to, it raises the question, Kevin, the great rotation.
Yes.
As we've been sort of debating whether this is. I mean, you saw it today in the regular trading session. You saw more of a risk-off behavior around all the tech names. You saw it in the NASDAQ. But the Russell 2000 hasn't necessarily been benefiting in the same way it was in recent weeks. Triple Qs are lower, too, by the way, in sympathy right now. So how does this speak to inflows, outflows?
For the great rotation to really take hold, we need the rally to expand beyond the Mag 7. That needs to start with earnings. Over the last 12 months, the Mag 7 have accounted for 83% of the earnings growth of the S&P 500. So it shouldn't necessarily be that surprising that some of those Mag 7 names aren't necessarily leading the way anymore. And that opens up opportunities in small caps, in international stocks, in other beaten down sectors like utilities and healthcare and industrials, namely aerospace and defense. So I think this is a reminder to investors to diversify, but not necessarily abandon large cap growth technology stocks.